Welcome to My Finance Teacher YouTube channel. Today again we are going to look at short-term prospects for gold price, and in front of you is a daily chart of gold going back to June 2016. As we know, we are now at the advancing phase of an intermediate cycle that usually lasts for about half a year. These advancing phases of the current intermediate cycle and the previous one that started in June last year are shown here on the chart with these crude little funny arrows. There is still quite a lot of potential for the gold price to keep increasing until we start this declining phase of an intermediate cycle. However, there might be something else to consider. Intermediate cycles consist of several shorter term cycles, and those are again shown here with these crude little arrows. The decline in gold price that we saw at the end of January, that took us from the price of $12.20 to about the price of $11.80, might have been the low of this short-term intermediate cycle. In that case, we are now at the advancing phase of another short-term cycle, and there is not much impediment for the gold price to keep increasing into probably $12.40, $12.50, $12.60, into the prices of those ranges, until we start expecting another dip into the low of the second short-term cycle. However, I think it is more likely that this recent dip in January was, call it a fake out, and we have not seen a proper low of this short-term cycle yet. In that case, there is little potential for the price to keep increasing to probably levels of around $12.30 or so, not more than that, after which we will probably see slightly longer term decline in the gold price that would last for more than 3 days, as it did at the end of January. In this case, the price of gold might follow a path like this, indicated by this blue line. The reason I think that this is a more likely outcome, and we are probably more likely going to see the low of this short-term cycle somewhere near the end of February, is as follows. Here in front of you is the daily chart of US dollar going back to May last year, when the intermediate cycle for dollar has started. And since May until early this year, since May last year until early this year, dollar has been enjoying this rally from a level of around 92 to a level of about 104. Since the beginning of this year, dollar has been losing value, and it has now retraced about 38% of the previous rally. And as we have mentioned in the previous videos, you will see links on the screen, 38% retracement, either going up or down, is often either a support or resistance level, which makes it likely for the price to bounce off this level. So it is quite possible that dollar is going to bounce back up for a while, and we might see that happening over the last 3 days. In that case, if dollar is going to bounce back up for a little while, for a few days probably, then it is likely that gold still has to make another low within this same short-term cycle. And after that, we will enter a new short-term cycle resuming our advancing phase of the longer intermediate cycle, which will probably top at levels higher than this 200-day moving average, which is the thin green line, and also at levels higher than this decline line of the previous intermediate cycle. So that is our outlook for gold over the next short term. Remember, this is not investment advice. However, I wish you luck, and if it has been interesting, subscribe to our channel.